How are the fires in the Los Angeles market likely to affect us here in Orange County? Well, I'm going to break down both the short-term impacts, long-term impacts we are very likely to see from this. Now, if you don't know who I am, my name is Christian Stubbs. I'm team leader and owner of Onyx Homes. This is all about Orange County, where I'm just here to give you as much information as possible. So the Orange County housing market, I don't think it's any surprise, has been affected by wildfires over the last several years. And this one in Los Angeles has been horrible. It has been a really heartbreaking experience. And I'm about an hour south of, maybe an hour and a half south of where a lot of the impact zone is. So Orange County has not been affected by the fires themselves. So I'm going to talk about the housing market. Now, of course, before I dive into the video, I'm not going to dive into politics or anything like that. Strictly what we're going to be talking about is how does this affect Orange County and this maybe surrounding areas a little bit. So if anybody was involved in this, I cannot express my sorrow enough. It's a horrible, horrible thing. And if from a real estate perspective, you need any help whatsoever, or you know somebody that does, have them reach out to us. We'd be happy to help. But for this video, let's dive right into the short-term impacts, and then I'll get to the long-term impacts. So short-term impacts, we are very likely to see, and we already are, an uptick in demand, both for buyers and for renting. While this is definitely going to be a short-term impact, if you are thinking about making a move in the next however many months, this isn't anything that I would change plans over. Yes, there are definitely going to be people that maybe lost their homes or maybe just don't want to go back or for whatever reason that are going to be relocating out of Los Angeles into Orange County and the surrounding counties. I don't think that's going to meaningfully affect anything, but we will see an uptick. We already have a little bit in the demand cycle for this time of the year. Now, the good thing is I don't think this is going to meaningfully affect prices at all. We have enough inventory on the market where even if we had a 10%, 20% bump in demand overnight over a short period of time, there is enough inventory on the market where that'll unlikely play a big impact. Now, what we will see in the short term, and we absolutely already are, as disgusting as it is, we're going to see sellers try to take advantage of this market, where people are going to put their home on the market for 10 or 20, 30, 40% above market value. And again, as disgusting as this is, honestly, I think it'll be irrelevant. I think we're just going to see some sellers test the market to see if they're able to get some make me move type price, or if they can capitalize on what's a really sad event. Obviously, we're not advising any of our clients to do this, but people are going to do what they do. So having said that, I think those homes are going to stay on the market. I don't think very many buyers are going to feel desperate to the point where they have to have a property at a way inflated value. I don't see that happening at all. So the good news is in the short term, I don't see this affecting price. I see this moderately affecting demand in the relatively short term. And I'm talking like 30, 60, 90 days. I think by the time we get 90 days in the future from now, this won't be affecting really anything at all in the Orange County housing market. Now, having said that, what it will affect, and this is going to lead into our long-term effects, is absolutely going to make it even more difficult for homeowners insurance. If you've been following at all, the homeowners insurance market for Southern California has been quite literally a disaster for the last 2 years. It has been very difficult for a lot of homeowners to find homeowners insurance. If you were already in a fire zone, it's got more expensive and harder to find. So in the very short term, it's going to get even more difficult on something that's been a problem, and this is just cranking it up to 10 and making it a very amplified problem. Now, to be clear, you still can get homeowners insurance. Everybody's still transacting. We haven't lost any deals, meaning that we haven't had a buyer go into escrow or a seller go into contract where insurance killed the deal. A lot of times it's just more money, or it's more difficult to get a policy than most people expected. So is it a huge pain point? What's actually going to happen? I don't have a crystal ball. I don't know, but it's definitely going to be more expensive and more of a pain to get. So let's talk about, that's the short term. Let's talk about long term. Especially if you are a homeowner in Orange County or anywhere in Southern California, this is an important part. So insurance has been difficult, like I said. It is only going to get more difficult. We have had a lot of insurance companies pull out of California altogether, stop writing policies, and a lot of people, even though you might be a homeowner that is paying your homeowner insurance company for the last 35 years, that doesn't necessarily mean that they're going to keep your coverage. So my advice is, if you're a homeowner already, is to start shopping your insurance for all insurance purposes, especially if you're homeowner's insurance. Because just because you've been paying them for 35 years doesn't mean they can't pull your insurance next year when your policy's up. Or it doesn't mean they're not going to increase the price by 50 to 100%, doubling or tripling your monthly dues or annual dues. They can do that, and it's happening a lot. I just saw an article, I won't quote numbers because I don't know how accurate they were, but 20 to 30% increases in dues this year, and they increased dues again last year by almost the same amount. So very large increases in homeowners insurance. My recommendation to you is to get ahead of that. Start to have conversations with different insurance brokers to make sure that you're with the right company for you in the short term and in the long term. Now, another topic that this is really, I haven't heard anybody talk about this is going to very much amplify a problem that we've been seeing and kind of tiptoeing around. A lot of lenders are tiptoeing around this, is there's a lot of HOAs that are in trouble, and especially the townhome condo HOAs where you're in a shared building or multiple shared buildings. Now, what we've been seeing sporadically, not a lot, but like enough to be like, okay, this is interesting. We are seeing HOA companies or HOAs in general that are not able to renew their insurance policies. And what's happening is they go on the do not lend list. Now that might sound rather rudimentary, but that's actually what it's called, where the major lending institutions will not allow funding a loan in that neighborhood. So if the homeowners association is not able to get an insurance policy, meaning and no lenders will lend on that, that is materially affecting the home values in that neighborhood. And this is popping up all over the place. There's a couple different reasons this will happen. Number one is that HOA's financials might just not be very solid in the first place, and a meaningful increase in the insurance might actually make it to where that HOA is losing money. And what happens there is they raise their monthly dues, or they assess what they call a special assessment. So we are seeing in some circumstances where HOAs are raising their monthly dues by $100, $200, $300, $400 per month in order to get their numbers right financially for the neighborhood. And in some circumstances, I haven't heard this yet, but I'm sure we will in the future, is they're giving special assessments, which is basically a one-time or maybe multiple payments from each of the homeowners. And these can range from a couple $1,000s to tens of thousands of dollars per homeowner, which are very meaningful if the financials are really, really bad and they need fast cash. All these different situations, again, this isn't to scare anybody. These are just things that were already a little bit concerning in some neighborhoods, and this just put a huge magnifying glass on those HOAs where maybe the financials aren't so great. So again, if you are a homeowner, it might be a good idea to start poking around and looking at the HOA and just getting a better idea. Now, if you don't know what you're looking at, call, ask questions. If you want to reach out to one of our agents to ask for some additional information, absolutely you can. I'm not just sharing any of this information to scare anybody. There's nothing wrong with HOAs. This is just something that a lot of people don't really know anything about until it becomes a problem. We're starting to see it, so I wanted to share it with you here first. Now, with insurance and HOAs, the only other thing that I think is also important mentioning is if an HOA is already having to deal with this insurance problem and there are other kind of lingering problems with the HOA, they're probably going to handle that at the same time. So for example, deferred maintenance is something that is somewhat common with these especially condo townhome HOAs. Common is the wrong word. It's way less than half. It's not like a more than half or average. It's a thing where, and you probably know that if you look around your HOA and you start to see, hey, the roof don't look so good, the maintenance is maybe lacking a little bit, it is very likely that they have deferred maintenance with the neighborhood. Now, if you have an insurance premium problem and the HOA's insurance cost is going way up and they have deferred maintenance, this is when you might likely see an HOA finally dealing with problems they should have dealt with months or even years ago. So the long and short of this is, in the short term, I don't think we're going to see very many meaningful impacts other than a little uptick in demand, and insurance is going to be a little bit of a headache, even more so than it was. Long-term impacts, again, I don't really see this affecting the Orange County housing market in any negative or positive way, other than just amplifying the insurance issues that we've already had. I do think some HOA condo townhomes or townhome condo HOAs are gonna feel a lot of pain, and there's gonna be some people that need to sell because they can't either afford the dues or special assessments. I think there's gonna be some people in situations like that. So my advice to you is, if you're in an HOA, I would get the financials and try to get a better understanding there. Now, in times like these, we encourage you to lean on our expertise. when I say us as real estate agents, if you want to talk to somebody, if you're not thinking about moving, if you want to talk to somebody about, hey, I got questions about my HOA, are these things that I should be concerned about? The good thing with us as real estate professionals, real estate agents, is we don't take any sort of fee or compensation unless we close a deal. So if you want to lean on us for our expertise and you have no interest in moving at all anytime soon, it's totally fine. Go to onyxhomes.com and then hit the buy or sell or finance button, whatever kind of area you're looking for help in. We'd be happy to help you out. Also, if you want to jump on our newsletter, you can do that as well too, onyxhomes.com. Right there on the homepage, you got a place to drop your email. We'll send that email to you every Friday as well too. Again, my name is Christian. This is all about Orange County, and I will see you in the next video.